America's Commercial Real Estate Show is brought to you by Bull Realty. When your business requires proven performance, visit bullrealty.com. And Arnold, Golden Gregory, a law firm that makes a difference. Visit agg.com. And Cone Resnick, providing forward-thinking advice to help navigate business and financial issues. Visit coneresnick.com. And by France Media, providing exposure to the world of commercial real estate. Visit francemediainc.com. Welcome back. I'm Michael Bull, and this is the Commercial Real Estate Show. How would you like people to come to your website to hear the Commercial Real Estate Show? Well, you can now download a free widget allowing your site visitors to access show videos and audio podcasts right on your website. Just visit commercialrealestateshow.com and look for the widget on the homepage. You can see how it works and easily download it to your site. After you load it, it works automatically. Well, today we're discussing the healthcare industry and medical real estate. Please welcome my next guest, Paul Zeman, Partner, Healthcare Real Estate Services at Bull Realty. Paul's team focuses on assisting clients with the acquisition and disposition of medical office buildings in the U.S. Paul, thanks for joining us today.
Well, thanks for having me, Michael. I appreciate it.
Well, thank you for being here with us. And Paul, for a little perspective, what is the size of the medical office investment market in the U.S. compared to non-medical or regular office buildings?
You know, Michael, it's very small. If you want to talk in terms of sales volume, in 2012, we're looking at a little over 420, MOB sales or so, as opposed to general office is something in excess of 2,000. 25 million square feet of sales in 2012 versus over 330 million square feet of sales in general office. So it's sized very differently. Right. Okay. And it seems like a lot of folks, investors and brokers, they prefer to deal with regular office rather than medical office. What are the major differences between medical office and regular office properties? Well, Michael, medical office is just like general office. It's just a lot more complex. There's a lot more moving parts in regulations. We have certificates of need, letters of non-reviewability, Stark issues. The tenants, your tenants are much more under the gun in terms of reimbursement. Decision-making processes within healthcare systems are far more complex and lengthy than in typical corporate America. You have more property restrictions. You have to be more cognizant of competing tenants. There's a lot going on. Yeah, that's a good point. If someone opens another commercial brokerage in my building, I really don't care. But if I'm a certain kind of healthcare provider, that makes me a little nervous. Yeah, right? If you're an orthopedic surgeon, you don't necessarily want another orthopedic surgeon across the hall. Yeah, so you have that sort of retail problem that you have with retail tenants. You got to look at the right mix, right? Absolutely. Okay, and I guess so the management then is a little more involved and difficult on a medical property versus a regular office property as well? Property management has got a much greater level of sensitivity for things like HVAC, plumbing, privacy, sound. Your backup power is very important, and essentially a medical building is going to be open for longer hours during the day than a regular office building. But I work with a lot of the large property management companies around the country, and some very small. And the other day I was talking with Jane Clark up at Wolf River Management up in Germantown, Tennessee, a great company. And Jane pointed out that beyond the issues that I've already mentioned, like HVAC and plumbing, it's really important to have emergency plans in place. Emergency vehicles are a common element of a medical office building. Preventative maintenance is huge. There's a lot of high-dollar equipment in the building that's got to be monitored for function and air temperature. And other regulations you just have to stay on top of, ADA, OSHA, HIPAA, just much greater focus. Well, that explains when office tenant reps don't want to deal with doctors or medical practices, because there's just much more involved there, right? That's an understatement. Okay. Well, Paul, have investors' outlook on future performance in the sector changed since Obama was elected for a second term? Not necessarily. First of all, the Affordable Care Act has not been fully implemented, and that's going to take a good period of time. But what we do know is going to happen is patient loads are going to increase. Reimbursement is certainly going to decrease to some degree. We're not sure how much of each just yet, but at least tenants now have the cards in their hands that they've been dealt, and they can start to put a strategy together based on that.
Okay, so you haven't seen a surge in demand from, say, a year ago, now that people are more confident that Obamacare is here to stay?
No, I wouldn't say that I have. No.
Okay. All right, well, stay tuned for more medical office market intel. We have to take a quick break. I'm Michael Bull, and you're listening to the Commercial Real Estate Show. We'll be right back. America's Commercial Real Estate Show is brought to you by Bull Realty. When your business requires proven performance, visit bullrealty.com. And Arnold Golden Gregory, a law firm that makes a difference. Visit agg.com. And Cone Resnick, providing forward-thinking advice to help navigate business and financial issues. Visit coneresnick.com. And by France Media, providing exposure to the world of commercial real estate. Visit francemediainc.com. Welcome back. I'm Michael Bull, and this is the Commercial Real Estate Show. We do have some very interesting shows coming up for you, including a show featuring business tips about using LinkedIn and our holiday present shows on leasing and selling commercial real estate. Be sure to catch shows of special interest to you. Sign up for a once-a-week email announcing the show topic at commercialrealestateshow.com. Well, we're discussing the healthcare industry and medical real estate with Paul Zeman. And Paul, what are you seeing for cap rates in the markets you work in right now for medical office buildings?
You know, Michael, I'll preface with what I'm going to say, that I really focus on the institutional quality assets at $5 and $10 million and above. So the cap rate conversation that I'm going to have is going to be quite a bit off from maybe the 8.6 that Walter was talking about from CoStar. But based on the types of buildings that I work with, I'm seeing CoStar reporting somewhere in the average of 7.2. Real Capital Analytics, 7.8. And I'm going to say that based on the properties that I've recently closed and that I currently have under contract, that the real number is somewhere in between, somewhere in that range.
Okay. So these are core, stable assets that are fairly new and long-term leased.
Yes, exactly.
So if I've got a 2-year lease on my building and a 20-year-old building, I'm not going to expect to see that cap rate.
10 cap.
Okay. Well, what are some of the major factors that affect the values and cap rates for these institutional quality medical office buildings, Paul?
Proximity to campus has always been a big one. The credit status of the tenant, the length and structure of the leases, the age of the asset, and really the overall market, maybe even the overall vacancy in that market and where rental rates are, is going to really push the cap rate one way or the other.
Okay. So there's a lot of factors that affect it, including the location and the credit of the tenants.
Absolutely, and the overall market.
Right. Okay. Well, what are cap rates for normal office properties compared to medical office properties? You seeing the same difference that Walter was talking about?
I'm seeing about a 60 basis point difference in general office versus medical office, and I believe it's because the general office building is not going to have some of the complexities that we talked about earlier, so the return is not going to be quite as strong.
Right. It's more difficult. You got a lot more issues to deal with on a medical building, so you expect a better return. It's kind of like student housing. They'll sell at 75 or 100 basis points better price than regular apartments because of the complexities of management. So, that makes a lot of sense. Well, Paul, what do you expect for cap rates in 2013 and sales volume moving forward?
I'm still believing that we're going to see some degree of cap rate compression, maybe not as much as we'd all love to see. I think we're going to start to see some resistance in the low 7s or even 7.0. With that said, there have been some sub-7 transactions recently in extraordinary markets with just extraordinary assets.
Right. So you expect to see a little more cap rate compression moving forward?
Yes. And as far as sales volume goes, I think that sales volume in 2013 will outdo 2012, where we're estimating it's going to be somewhere between 4.8 and 5 billion in 2012. We should maybe see a 10 to 20% increase in 2013.
Okay. And when fourth quarter of 2012 is reported, do you expect a surge there of folks that were trying to get in before the end of the year, tax year changes?
Yeah, we absolutely do. There's definitely going to be some changes to the tax structure, and a lot of folks are trying to get some assets buttoned down prior to year end.
Okay. All right. And then I've got investors that are always trying to get me to introduce them to you. They want to buy medical office buildings and they can't find them on any listing services. Why do some medical office building owners prefer to sell their properties quietly, Paul?
You know, Michael, a lot of the medical building owners don't necessarily want to cause a tremendous amount of concern for their tenants. It seems like the rumor mill runs wild when you find out that your landlord is selling their building, and while trading buildings or watching transactions might be an everyday occurrence for you and me, sometimes it gets the tenants very uptight. Another reason that I see often is that there are some large medical office building developers that don't necessarily want to establish the reputation as being a seller. Because it could potentially hamper the next project that they do with a major health system.
Right. You want to, as a tenant, you want to know who your landlord is when you get into that relationship, right? And you kind of be able to count on that.
Yeah, absolutely.
Okay. Paul, how can investors get information on available medical buildings?
You know, Michael, it's important that investors develop relationships with MOB brokers like me. I mean, I'm entrenched in the market. This is all I do day in, day out. It's important that you let someone like me know what your investment criterion is, and most importantly, how you demonstrate a great ability to close. If you can do all that, then the opportunities will start to come your way.
Okay. So the sellers that are talking to you, they're counting on you to bring them buyers that have a proven ability to close. They have the cash, they have the wherewithal, and they can be counted on, right?
Absolutely. And sometimes the mission is very different. Sometimes it's, hey, let's go to the top 5 or 10 or 20 buyers. And other times sellers will ask that we go to the open market. But it's important that we put an effective game plan or business plan in place for each specific seller.
Okay. So I might be in your top 5, I might be in your top 10, I might be in your top 200. So you just have an order that you go to there.
Well, based on the asset.
Yeah.
I mean, I have certain buyers that I know flat out that a ground lease is just not an option. I know not to call them. I know who likes on campus. I know who is more favorable to maybe a hospital-sponsored off-campus asset or a satellite location.
Right. And you know about the relationships between the healthcare systems, right, and some of these investors.
Absolutely. Some investors can't buy certain properties because maybe a competing health system is across the street and they own that building and they have an agreement with the healthcare system.
Okay. Well, it's a very interesting sector. After a quick break, more on the healthcare real estate market. I'm Michael Bull, and this is the Commercial Real Estate Show. We'll be right back. America's Commercial Real Estate Show is brought to you by Bull Realty. When your business requires proven performance, visit bullrealty.com. And Arnold Golden Gregory, a law firm that makes a difference. Visit agg.com. And Cone Resnick, providing forward-thinking advice to help navigate business and financial issues. Visit coneresnick.com. And by France Media, providing exposure to the world of commercial real estate. Visit francemediainc.com. Welcome back. I'm Michael Bull, and this is the Commercial Real Estate Show. Are you in any business related to commercial real estate industry? Well, help our listeners connect with you. Post your business on the show's free professional directory at commercialrealestateshow.com. And if you need professional services of any kind anywhere in the country, check out the directory. It's free. If you don't see a match, you're welcome also to give us a call at 888-612-SHOW, and we will hook you up with a professional. Well, today we're discussing the healthcare industry and medical real estate with Paul Zeman. And Paul, I'd like to ask you about what makes you nervous or excited about the sector.
You know, Michael, I still love the sector. I'm a firm believer that it's one of the strongest sectors of commercial real estate. It's fortunate that I've got a background in healthcare and I can really apply it to my investment sales brokerage business. But on the positive side as well, seeing sales volume continue to increase from the lows we had in 2009 up to surpass the highs we had in 2007 are really encouraging.
Yeah. Well, I think that's interesting. Your healthcare background has been very helpful when you're dealing with those buildings and tenants and understand the mix and understand how those tenants connect with each other, right?
Yeah, there's a synergy in a medical building, and that's very important.
Yeah.
In terms of referral patterns.
Right. And also, I guess when you're talking to these tenants about getting their whatever information you need them to sign, it's important that they kind of talk the language with you, right?
Yeah, absolutely. And, I've been in their shoes. I've been a tenant as a healthcare provider for a number of years. I've leased space. We've purchased and sold buildings. This is just an extension of my old business.
Right. Are there any trends you're beginning to see or expect to see in the marketplace?
I'm continuing to see an increasing popularity in the off-campus medical office buildings. As we discussed a little earlier, the Affordable Care Act is going to provide Americans with access to health care, or more Americans with access to health care. And a lot of those will likely visit MOBs that are out in the suburbs or satellite locations and not necessarily at the campus of the big hospital in the city.
Okay. So if I own a stable medical office building right now, is this a good time for me to sell and give you a call?
Yeah, absolutely. I think that if the leases are structured correctly and it's a sizable asset, it's absolutely worth talking about.
Okay. Well, Paul, our fun has to end soon. We're almost out of time. Can you leave us with a quick tip for our listeners?
I would just like to convey to the audience that if you're a developer or owner user or have an MOB, and you need to get an exit strategy in place. It's going to affect the value of your building later on. Some of these actions include implementing triple net leases with a property management fee built in. I'd like to emphasize that.
So you're talking about when I'm going to build the building in the beginning, or I'm setting up leases, or if a tenant comes to me to adjust a lease on my MOB, get with you then to say, hey, what's this going to affect my value if I want to sell it down the road?
Absolutely. Keep those things in mind. Use annual escalations as opposed to CPI. Give investors something that they can really bite in so they can look at earnings over a 10-year period. Some of the don'ts, options to terminate, multiple one-year options to renew. These are the types of things that will hold you hostage when the day comes that you want to sell the building.
Okay. Now, I know you're known for selling buildings, so if I need some advice like that, but I'm not ready to sell my building today, maybe I'm going to sell it a year or two down the road, it's okay to give you a call for that advice now?
It's a great time to talk, even if you're 5 years away from selling. The point I'm trying to make is don't wait to call me specifically for the transaction need. Let's get started early, plan ahead. It makes the ride a lot more fun.
Okay. Well, Paul Zeman, thanks for joining us today. We sure appreciate you being here.
Well, thanks for having me. Appreciate it.
If you'd like more information from Paul Zeman, visit bullrealty.com. Now, I have a question for you as a listener. Can you join us next week? Okay, well, I hope so. We'll explore tips and strategies to power your business with LinkedIn. In fact, we're going to have the queen of LinkedIn on the show. It should be a lot of fun. Thanks for joining us today. I'm Michael Bull. Until next week, be sure that you always lead, learn, and laugh, and join us for the Commercial Real Estate Show.